Hi, and welcome to our Foresights webinar, Unlock Market Opportunities, Strategies for Growth and Funding. I'm Bridget Height, host and moderator for First Franchise Capital. And today I'm delighted to have Alicia Chandler, president of First Franchise Capital. And we are welcoming back Marc Chandler, chief market strategist at Bannockburn Global Forex, a First Franchise Capital affiliate through our parent company, First Financial Bank. Today, they're going to discuss the 2024 current macro and economic environment, managing a business in 2024, and strategies to fund your growth while managing your cash flow. So Alicia and Marc, thank you so much for joining me.
Thanks for having us.
Thanks.
Well, to start off, Marc, can you walk us through the current economic updates and then discuss what are some key economic factors such as inflation or interest rates that are most likely to impact businesses in Q2 for 2024?
Yeah, sure. So, I think that broadly speaking, it's been a challenging time between the COVID, the pandemic, the recovery from the pandemic, Russia's invasion of Ukraine, the try to de-risk from China. So it's been a very challenging environment for businesses. The Federal Reserve seems to be done with its monetary tightening cycle that began in March 2022 and probably finished somewhere around the middle of last year. I think many of us are expecting a rate cut, and now it's a question of sort of how soon and by how much. At the end of last year, as often is the case, the market went excessive. So that pendulum of market sentiment swung very hard towards very aggressive Fed cuts. And this weighed on interest rates and the dollar in Q4, even though the stock market did well. Here, as we begin 2024, the market has corrected. That is to say, the market has once again converged with the Federal Reserve. In December, the Fed said that the median out of the Fed officials looked for 3 rate cuts this year. At the end of last year, the market was pricing in almost 7 cuts. But between the Federal Reserve official comment and the economic data, the pendulum has swung back, and once again, the market has converged with the Fed. When will the first cut be? It looks now that the market's thinking somewhere around the middle of the year.
Okay.
But it's still a challenging environment. Economic growth is likely to slow sharply this year from, call it, above, say, 2.5%, 3% in the second half of last year. And the Federal Reserve says trend growth. And by that, they mean the pace of growth that's non-inflationary is about 1.8%. And it looks like we're going to grow above that or near that in Q1 before a more genuine slowdown takes place later this year.
Okay. Does that take us all the way up to 12 to 18 months? Do you see any current interest rate projections for the next 12 to 18 months?
I think that we should be expecting lower interest rates for the Federal Reserve to begin cutting interest rates. At first, the cuts will be to really maintain the real interest rate. What happens is the Fed wants to look at interest rates excluding inflation. That is the real weight or the real impact of interest rates on the economy once adjusted for inflation. And so this easing cycle that's likely to begin, say, somewhere around the middle of this year is likely to run through most of next year as the economy slows. But, this is also the 4th year of a presidential cycle in the U.S., and there's a couple of regularities. One is that very rarely does the economy have a recession. That is, very rarely does the economy contract in the 4th year of a presidential term. And also, very rarely does the stock market weaken on a year-over-year basis in the 4th year of a presidential term. So for investors, this means lower interest rates, probably higher equity prices, but the economy avoids a recession this year. Often that downturn takes place early in the next president's administration.
Interesting. So should business owners wait until the rates are lower to seek acquisition opportunities?
Well, we're seeing more acquisition opportunities now from our clients at Bannockburn, off to a strong start this year. It's not just the interest rate, but being able to find companies that are, say, below real value by the different companies' models. They want to buy undervalued assets. And we're also seeing a lot more U.S. interest in foreign acquisitions in Europe and Japan, partly because of the strength of the U.S. dollar.
Okay. Alicia, do you have anything to add to that?
In this type of environment, I think it's incumbent upon business owners in the industries that we serve in the advisory space, insurance, and CPA world. Now is the time to just take a look at what's out there.
Okay.
And it's not a time to stop. You need to continue to look. What are the other opportunities? Maybe it's a time to sit down and take a look at your business plan that you have together and your projections and see if those need to be updated or changed.
Okay.
So I think it's definitely not a time to stop. It's a good time to reassess and prepare for the future and take a look at what's out there in the market.
Okay, great. So, Alicia, how do you think businesses can be prepared to serve their clients during this time?
So I think one of the biggest things for those industries is to assist your clients with preparing for the future. So listening to things like Mark was just talking about with the economic forecast, depending on the particular service that they're providing, they can help their clients prepare, for their future, tax planning strategies, family wealth planning. Are there any of those types of changes in connection with the economic forecast that they need to go out and take a look at their clients' portfolios and advise their clients at this time?
Okay, Mark, do you have anything to add to that?
Yeah, I would just think that one thing I see that businesses are challenged to do, but it's incumbent upon about doing it, and that is to align the business interests with the customer's interests, as opposed to being pulling in opposite directions. I think that in this kind of climate and in the environment that we're in, that having this alignment of interest is really conducive for both sides, and it avoids this sort of the competition where sometimes we see some U.S. banks might be competing with their clients to buy assets, and that's not. I think that becomes a challenge, but I think that building trust between the clients and is really about having a common goal and having aligned interests. I think that's what we need to do, broadly speaking, align our interests, align business interests with their largest customers' interests.
Great. So, Alicia, what about the QSR industry in comparison to last year? What kind of what differences are you seeing?
So what we've started seeing in the last few months in the QSR space is operators that maybe only have a handful of stores. They're starting to get some pressure from the franchisors to sell to larger franchisees, those that have, maybe 30, 40, 100 stores.
Oh, okay.
And so they're starting to consolidate in that industry. And we've also seen quite a few that are for succession planning.
Okay.
In particular, we had one client that in the latter part of last year and then in January bought out 2 additional franchisees because the people that were running them were in their early 60s and they wanted to get out. They had been running the operation for about 30 plus years. So similar to the other industries, there's the age factor as well.
Okay. Time to retire. Enjoy.
And enjoy the fruits of their labor.
Yeah. So considering an uncertain market, what defensive strategies can those in the QSR space deploy to mitigate risk? Alicia, I'll start with you, and then Mark, I'll ask you in a moment.
So the biggest issues that we continue to see in the QSR industry are cost of goods sold, so COGS, and inflation and labor.
Okay.
So the biggest, I think, defensive strategy that QSR, the franchisees, can employ is technology.
Okay.
They need to be data driven. They need to make sure that they understand how each and every single store is operating. We have one client in particular that is very data driven and slices and dices the information from all 60 of his stores every single day, and has a team that looks at those numbers and can really dissect what's going on at each store. So again, technology, data, looking at the people that actually can help you interpret that, and having a nice back office that can really be set up to do all that, and to take quick actions. You have to make sure that in the QSR space, you have to react very quickly.
Okay. Mark, do you have anything to add to that?
I really would just echo this idea of becoming more data driven.
Yeah.
As we talk about AI and we talk about the latest technology, it's all data driven. And a lot of small and medium sized businesses are not familiar with that. They just don't generate enough data, so they could. And I would just underscore that as we move into and begin utilizing the latest technology, it's important to gather that data that you already have basically in-house. And so I think that I'd say that I think that's a very important thing. And the other thing I think is just in this uncertainty is really to really be on the lookout for what we call best practices. We don't have to reinvent the wheel. People know, I think, there's general understanding about how to deal with different environments and different tools to protect different risks. And I just think we want to expose ourselves and our clients to the best practices that are out there.
Great, thanks for that. So, Alicia, do you have any specific strategies for business owners on how to mitigate risk for their own business and take care of their employees?
So I think one of the biggest things that we continue to see over and over is just the failure to have a well thought out succession plan. Okay. Now, and that can protect both the business and the employees, because typically what we're seeing is that have employees that they want to take over the business, but they've not either documented that plan or had the honest conversation with their staff or their employees about that. If you don't have the open and honest communication, then no one understands what the expectations are. And people may get nervous thinking, well, if, so-and-so leaves, where does that leave me?
Right.
If you don't have that conversation about, I would like you to start learning the business management and take over eventually, then that leaves a big hole. So I think that's one of the biggest things that people can do to mitigate risk is to talk about succession planning.
Okay. How about you, Mark? How do they mitigate risk, economic risk for business owners?
Well, I think that we work hard with our clients to try to help identify what they're exposed to. For example, since the Federal Reserve has been raising interest rates, a lot of small and medium-sized businesses have tried to move from floating rate obligations to fixed rate obligations. Mm-hmm. Now that the Federal Reserve is going to likely begin cutting rates shortly, they need to move the other direction. Give up the fixed interest rates and move back to floating rates to benefit from a lower interest rate environment. So I think that, to Alicia's point, I think it's to be tactical, to stay on top of the developments in the economy, to adjust policy accordingly. And again, it's really seeing those risks, whether it's interest rate risk, commodity risk, or the exchange rate risk. But I think also, you raise a question about employees, and I think that this is a real challenge for a lot of U.S. businesses, where so much is left to the individual. I think about like our retirement plans. Many businesses have 401k plans as opposed to the fixed contribution, the defined contribution plans as opposed to the defined benefit. And so this forces us as individuals to have a greater responsibility for our own retirement money in a way it wasn't the case for, say, our parents' generation. And I think that businesses often forget, we get so caught up, I think, in products and prices and mitigating these risks, we forget that the real value of a company is the human capital, what they call human capital, right? That's the people I often think about that. Working at a bank and seeing people, a crowded elevator leave and knowing there goes the bank's human capital. Mm-hmm. I think businesses often think that workers, employees can be replaced, that of course we can be replaced, but at a cost. And I think that strengthening employer and employee relationships is really a key to strong, sustained business activity.
Great. Thanks for that, Mark. So how can business owners effectively communicate these topics, trends, potential risks, and tips to their clients? Alicia, do you have anything there?
That's a great question. I think the answer will depend on what industry you're in.
Okay.
It starts by understanding how your client wants to receive that information.
Okay.
Interestingly, we were talking to two different types of clients last week. One said, well, my clients are on Facebook. Another said, my clients are on LinkedIn and maybe X. So it depends on your audience, first of all, where your clients want the information to be communicated. And then thinking about how you will communicate to them. So do they like to also talk on the phone? Do they want you to call them? Would they like an email? Would they like a webinar, a podcast to listen to? So it's really incumbent upon the particular business to just understand their client and what is the best and most effective way of communication to get these topics out.
Okay. And then Mark, do you have anything to add to that?
And I agree. I mean, knowing your client is so important in these kinds of issues. I think also it's important that, I think we all want to feel like we're special. Especially right?
So true.
And I think how to convey that to a client, that they're just not a number, they're just not a a sales revenue figure to help you meet your target, but they showing a genuine understanding of a client's interests and their desires. Like Alicia was saying, not only how they want to be communicated, but like when. And also remembering that these people who are on the other side of the phone call or the internet or whoever we're dealing with are real people with families and other issues, other interests besides just the business. And I think that what we find from various walks of life, that embracing people as a whole and not just having to segment them. I'm only interested in you because you're buying my goods, but pretty broaden that to really be interested in them as people. I think that genuineness goes a long way these days.
Okay, great. So given all that we've talked about, we know that franchisees need to be caught up with the times for successful growth. So how can those in the QSR industry offer value beyond just traditional services?
That's a great question. Based upon what we're seeing with our new clients, they have the top line technology, the understanding of the data. They have excellent customer service scores based upon either Yelp or whatever other sort of tracking mechanism they have. And they have that personal touch with their clients so that people feel when they come in, they're really getting value and that they're being seen by the franchisee.
Okay, makes sense. So what tools and resources are available to professionals in each industry to stay up to date on the latest economic trends and developments and better serve the clients in Q2 2024? Mark, I'll start with you.
Yeah, I spend my days thinking about information, packaging information, writing about it. Of course, the internet is full of great sources.
Sure.
I think that if I had to compare something, I'd say that maybe what we're going through now is similar to what happened just as the cell phone emerged, whether it's with AI. I know that there's a lot of commercially available AI, and I think I use something with AI almost every day.
Really?
I mean, even for fact checking, of course, not for writing, but for fact checking, for getting answers quickly. It's like, I think, in some ways it's an evolution, right? We went from a word, a document, to now it can correct spelling, now it can correct grammar, now it can correct style. And I think that the same thing with the search engine. We used to say, show me X or something like that. And now it's so much more detailed. So I'd say you could, for facts, for finding sources, I think the internet is chock full of things. But I point out to two that could be very valuable for businesses as you think about through where we are in the economy, what the Federal Reserve may do. The first is the CME, that's the Chicago Mercantile Exchange. They trade Fed funds futures, which is really the overnight rate that banks charge each other. And it gives a very good guide to what the market is expecting for Fed policy. CME's Fed Watch is a very useful page. I use it almost every day to try to figure out what the market thinks about Fed policy, and that's the interest rate policy going forward. For growth, the market keeps evolving, and I know that any one economist's views aren't so important. What matters is the collective, is what's pricing into the market. What does the market, or what does the world, if you will, expect? And there's a new approach as well. The Atlanta Federal Reserve, for example, rather than approach the economy from a economist perspective of trying to forecast, they do it more like an accountant would. As the data comes in, they say, what's the economy tracking? You can have access to this at home as well, or from your office. If you just would use the search engine, you look for Atlanta Fed GDP Now. And it's updated at maybe once a week or so. It'll be updated after important economic data comes out. And right now, the latest print is for the economy to grow 2.9% here in Q1 before slowing down, what the market expects slowing down. But the Atlanta Fed, early in the cycle, when we just begin getting data, so for example, we're just getting January data now. The Fed's model is not so great. But as the quarter progresses and more data comes in for Q1, the Atlanta Fed GDP Now rivals these surveys for who's more accurate.
Good advice. All right. So as we wrap up, we've covered a lot, and sometimes keeping up with the weekly economic trends can be stressful. So what are your top pieces of advice for business owners to help them navigate uncertainty and ensure that the business is successful for decades to come? So Alicia, I'll start with you on that.
So thinking back to the variety of topics we've covered, I think a couple things come to mind.
Mm-hmm.
One is succession planning.
Right.
Make sure that you're having those communications. Another point that I took away from our conversation is just remembering that your client is not just your client. They are a person as well, as Mark pointed out. Getting to know them, their needs, their desires, where maybe you can help them on other aspects of their life or their business that you're not currently doing. One of the other things, and it made me think, recently we had the AT&T phone outage with cell phones, and that really made me think about business continuity planning and a workaround for how to reach your clients if there's an outage of some sort, or however you might need to communicate with them.
Great. So. Thanks, Alicia. How about you, Mark? What do you have to add?
Yeah, I mean, I kind of think that what we want from businesses, and what businesses need, is the same thing we want from individuals in a sense. And that is, the only thing I guess we could be sure of is change. Is no matter how we were doing things last week, last year, 2 years ago, if we're going to get better, we need to change. And so it seems to me that, like, evolutionary wise, it's not to the fastest or the swiftest, but to those institutions that can change and adapt to and be flexible. But at the same time, what we're talking about, both for individuals and for businesses, I think is a resilience. Is everything doesn't go our way all the time. There's setbacks, whether it's higher interest rates, disrupting supply chains. We always have setbacks. And so how to like build institutions and individuals that can be resilient to these setbacks without being morally defeated. And I think those are the two things. I think the ability to embrace change, to recognize that we have to change, no matter how good we are already. To be better, we need to change. And at the same time, to recognize the world is changing around us, and we need to be resilient, which partly means, like some of the things we've talked about, adopting technology. Maybe not, you don't have to be the first mover, but being able to recognize the use cases for new technology, and to broadly, I think that is really the key is resilience. Being able to change without changing necessarily those core values that made you successful in the first place.
Great advice and much appreciated. Alicia and Mark, thank you so much for joining us here today. Thank you.
Thank you.